And we're back with another episode of Pure Perspectives. We've missed you guys. We're back.
What's going on?
This is the weekly update. Guess who I have? I got Big Gary. As the locals that I deal with call him the guy in the cowboy hat. Like, who's the guy in the cowboy hat? I'm like, that's Gary.
It's him.
He's the co-host.
He's him.
Of Pure Perspectives. Gary.
You got it.
We got Kevin Warsh confirmation. Yeah. We've got inflation.
Yeah.
We've got 10-year going up.
Yep.
We've got oil prices going up. Where do you want to start?
Can we take a vacation and come back?
Come back when things settle down.
Yeah, no big surprise. The inflation deal, obviously it's really easy to see when the cost of fuel basically is 40-50% higher than it was 60 days ago.
Yep.
That's going to be a big impact on the numbers when they come in. So what do we just had April numbers. So we got to get through April. We got to get through May. So we're probably going to have a full month of May at these elevated prices. So that's going to be the June reading. So your earliest relief is July, August, as far as inflation is concerned, because the biggest driver is oil costs. As you know, that affects production, that affects groceries, that affects what you put in your fuel tank, obviously. There's just no way around it. There's no way around it. So, yeah. So what that means for us is rates are, still up. We're still in that, where we were 45, 60 days ago. It was a good, a good run from, call it, November through January.
We had
March, February.
We had
a good run.
Yeah. It's a good run.
Us loan officers, we got a little ahead of ourselves. But I think the thing about it is, the way I look at it is, our business isn't predicated on the 10-year, right? Our business is built on relationships. Our business is built on having products that people need. The non-QM space is absolutely on fire. And what does that mean for the layman term? Non-QM is essentially non-agency loans, so non-Fannie Freddie. And I know this isn't a product video, but I'm going to go down that path just because I don't want to talk about inflation anymore. So I'm diverting. I'm doing the political answer to a question that's
a great question, but let's talk about over here. Yeah.
So watch the birdie.
Yeah.
So like your self-employed folks, your investors, non-QM, that's, jumbo loans. That market is absolutely probably the most, as far as the mortgage industry is going, is probably the most stable as it relates to delinquencies and performance of portfolio. And we're seeing it every day. Well, we've got investors coming in. We've got self-employed folks coming in, bank statement loans, P&L loans, 1099, just and so that's the opportunity, right, that we're seeing. So, I mean, obviously the 10-year, we want the 10-year better because that drives the biggest portion of the, interest rates. But the folks that aren't in a position to refi yet, that's the opportunity down the road. And we're just going to have to hold out until that, we had about a 3 or 4 week cycle that if you were in the money, you were, and if you weren't. And I've got a big whiteboard over here with 15 names on it. Before we started dropping bombs in Iran, we were like, hey, we need to start looking at your mortgage plan. And by that time, off
window
the table.
Closed.
We'll check back in 60 days. So.
Yep. And then we got vote tomorrow on Kevin Warsh, the new Fed chairman.
Fed. Yeah, he's got a lot on his plate. He's got to figure out, number one, this inflation issue, right? How are they going to combat that? What are they going to do with the Fed funding rate? Is this going to be, again, it's not his sole discretion to move the Fed funding rate. This is a voted on, situation. But, U.S. debt is on his plate as well, along with the Treasury Secretary Bissett. So he's got a 4-year term. So he's
fun job.
Yeah. Don't sign me up.
Don't sign me up for that job. No, thank you.
Yeah, not moving to
President
DC.
calling you every other hour. Like, hey, let's go.
Yeah.
Yeah.
What are rates doing?
What are rates doing? Why aren't they lower? Let's go.
So yeah, it just it goes back to having the mortgage plan. The conversations should sound like, what kind of seller concessions are you getting depending on the area you're in? How to keep more money in your pocket because things are more expensive. I had the conversation yesterday with a client and they're like, we're going to come in way low on the deal. And I said, okay, that's fine. And then so you do the math and let's say it saves them $50 a month in rate,
Hmm.
$100, 150, right? But if you can keep 10 grand in their pocket, that's real money. Don't forget about seller concessions. I know we talk about all the time in the past videos, but I'm going to keep beating the horse. Like it is absolutely the way to in my opinion, the way to negotiate right now is to get seller credits because that's real money that you're not bringing to the closing table. I mean, I got 2 deals right now that only cash the folks are bringing to closing on purchases is their down payment. Period.
Yeah. We should
So,
probably do a more in-depth video of seller concessions and how that works, because I do
mhm.
agree that there's still people that are very fixated on negotiating the price.
Yeah,
Like, hey, let me get the price X amount lower versus
yeah,
looking at something like seller concessions. So
yeah,
explaining, the difference there on the long-term impact to as you said, cash in pocket is probably something we should dive into a little bit more. Cause I don't think, I mean, here in this market, you just don't, you take
yeah.
what you get, but other
Yeah,
markets, yeah, absolutely. I mean, we're licensed in a number of states. It's a different market there. And I think
yeah,
understanding how seller concessions impact the deal and your cash is an important lesson that we should be sharing some more info on. So, hey,
yeah.
great idea.
We'll talk about it
We'll
more.
bring Willis
Stay
in.
tuned.
Yeah.
What you talking about, Willis?
We'll bring what you talking about Willis in and we'll get deep.
He can go deep and
He
long.
can go
He's
deep.
not afraid.
The other thing I would say is, we haven't talked about it in a while, is your home wealth report. If you don't have one, leave us a
Yeah,
comment. We can get you set up. It's free. Just put in your
yeah,
address. It gives you a monthly report on what's going on, your equity, where rates are. If you were to rent, it's a
yep.
very valuable tool. So if you
It's a
don't
good point.
have one of those, just comment home equity in the comments and we'll make sure you get set up.
Perfect.
Anything else we need to touch on, Gary?
No, I think that's this week's a lot of data this week. So it'll be interesting. A lot of volatility, right? Like a
Yep.
lot of moving parts. The numbers for the next until this Iran deal gets figured out, where
Yep.
you might as well just kick the can down the road 45 days.
Yep.
Every day that it doesn't happen, it's another 45 days because we need the cycle to come through where, when fuel prices drop, it's going to take a full 30-day cycle. So
Yeah. Yeah.
unfortunately, it's going to
And
be
consumer goods
July.
that leverage petroleum. I mean, they're buying oil at a price and, they have costs. So
Yeah. Yeah,
it's not
absolutely.
an instant switch that says, hey, war's over, oil's down, we're back
Yeah.
to lower prices. It takes a while to work through the system.
Yeah. Yeah. It'll take some time. I think you'll see some relief, a week or two into the fuel side, but rates, they want to see the numbers. They want to see it actually impact so that could be a
Yep.
45 to 60-day lag, unfortunately. Um, Here I am bringing great news again.
Great news. All the news and approved
Get your mortgage plan.
by the guy in the cowboy hat.
Get your home IQ report.
Get your home IQ report. Stay
Be
ahead of it.
prepared. Be prepared.
Be
Prepare.
prepared.
Fail to prepare. Prepare to fail.
I was going to use that and you stole it.
That's right.
All right. Well, that's the update for Tuesday, May 12th. We'll be back next week with hopefully some more positive news. As Gary
yeah.
said, a lot of data coming out. We'll get a better read on things in the coming days. So we'll be back next week for an update on all things mortgage related and really the economy.
Yeah.
Gary, thanks as always. Reminder, leave us a like, leave us a subscribe, comment home equity. If you want to report, we'll get you set up. Take care, Gary. We'll see you later.
See ya.